Hello and welcome to the Opening the Gates August 2025 UK property market update. Thank you as always for joining me, and thank you to those of you who are new to watching. For those of you who've not watched before, I'm going to be running through house prices, market activity, mortgage approvals, transaction numbers, inflation, in terms of what's happened in August. I'm going to try and add in a little bit of something new for this edition, which is going to be some year to date as well. You can also tell that August is over and we're coming into the autumn. I've got my hoodie on, my scented candle is going. So let's share the screen and get into it. Right, okay, so August 2025, that has flown by. Okay, so for those of you who are new, just to let you know, let me just move my zoom out of the way. There we go. Um, from left to right, we have year on year, August versus August. In the middle box, we have month on month, so July versus August. And on the far right, we have August versus the 6 year average for August. That's 2020 through to 2025. So to start with, on the market, that means properties for sale up slightly, so 5% year on year, slightly down 4% month on month, and 20% up on the 6 year average. What does that tell us? There is more stock available than there has been in recent years. Therefore, there is more buyer choice. That is good news because that's going to bring more buyers to market. However, sellers, that means more competition. They have got to price competitively to stand out in this market, and they've got to make sure their marketing is great as well. Gone are the days of COVID where you could just stick it on Rightmove, wait for the phone to ring. You got to be doing video tours, floor plans with the square footage on, professional photos, premium listings, presenter-led tours, social media, Twilight, drone, aerial, AI, loads of stuff we can be doing. In terms of something positive though, in terms of stock levels, they are the highest they've been since late 2013, which is good to see more stock on the market. Um, Probably said this before. I hate using the word stock, but from an estate agent perspective, I'll go with that. Obviously, it's not stock, it's someone's home when we're talking to the public. But it's 4% down month on month, which means that we're not seeing an oversupply of property in the market. If we go back to 2008 when the market crashed, we had an oversupply of property on the market and we just didn't have any buyers. If you compare stock levels of where we are now, even though they're at a 12-year high compared to 2008, I would guesstimate we've probably got 50% less stock on the market now than we did when the market was in turmoil. So we've got a nice balance of supply versus demand, which is indicated in the further bits that we're going to run through. So new listings down year on year 4%, down 13% month on month, and down 3.8% on the August average. I think what is going to happen in some of the information you're going to see is that August 2020, obviously coming out of COVID, it was absolutely berserk. So that is going to skew with the figures. Although I hate when some people say, oh, when was a normal market? When wasn't a normal market? We've been in a state of perma crisis and poly crisis for best part of 15 plus years now. If you don't know what permacrisis, polycrisis is, look at it on Google, ChatGPT, or feel free to DM me and ask. So new listings, I think sellers are sitting on the fence a little bit. This August data, most of that as well is prior to the government or the think tanks, the leaks there in terms of what the government maybe think about tax changes. That was towards the end of August. So I think that is showing before the tax change news came out. There are some sellers who are just maybe hesitating for whatever reason. Maybe they're waiting for interest rates to come down. If you look at where inflation is, pretty sticky. You look at wage growth, interest rates are not going to be coming down significantly in the future. And if you read into what the Bank of England say as well, they will continue to gradually reduce the base rate. So we might have one more this year to 3.75%. Remember, you heard me say it on this recording. I can't remember when the Bank of England meet actually next. I should know that off the top of my head, but they will pause probably, and then in the next one they'll reduce it 0.25% would be my bet. Right, sales agreed up 2% year on year. So shows that the market's moving in the right direction. So, demand is actually exceeding supply. from the new listings perspective. Although down 9% month for month, not unsurprising. August is the key month where holidays do happen, so you're always going to get a month for month reduction. But it is 3% down 6 year average. Again, hate to say it, but the 2020 figure would have skew with it. But with there or thereabouts on sale, we're pretty steady. In terms of price changes, up 3% year on year. Interestingly, down 24% month on month. I don't know if that's just where sellers have taken a break from the market, i.e., the house is still for sale, which we'll come on to in a second, but they've been on holiday and they've gone, well, what's the point in price reducing whilst we're away? I don't know. And up 21.5% on the 6 year average. If you read my full market update on my LinkedIn newsletter, price reductions are still considerably high. I've been reporting on price reductions for ages and ages and ages now. I do a lot of talks around price reductions. You'll see there's data from Rightmove and Zoopla this month on price reductions as well. So look out for that when I talk about that in a few minutes. So withdrawn numbers down across the board. I see that as a real positive. We've got sellers who are committed. They're wanting to sell. So they're not kind of maybe movers. They are serious sellers. Bit of alliteration there, if my English is correct, which is good for the market. We've got sellers who are wanting to move. So what I would say is that now is a great time to be having conversations with these sellers, saying, let's get ahead of the market and any tax talk in late October, early November for the budget. Find out who those serious sellers are rather than maybe movers. Have a conversation with them. Get them marketed well, get them priced well, get them moving. Because really the sales you are agreeing now are the ones you might just creep in before Christmas. Although if you look at how long it takes for transactions to go through, maybe anything you're agreeing to sell now is probably going to go into 2026. Fall throughs, interestingly, I don't really know what to say on this. They're down month on month, year on year, and down the average. Again, maybe more committed buyers in the market because of how stable things seem. Maybe the buyers have been away for summer and there's not been as many fall throughs. Who knows? But that's the first time I've seen negatives on that in that way for quite some time. And then relisted, just like the new listing numbers, down, but down significantly. Again, maybe there's some sellers who have been hesitant in August to come back to market. August is not necessarily a time I think a lot of sellers would think to come back to market. They're probably delaying till September when the kids go back to school. And maybe towards the end of August, there was some sellers going, well, let's see what happens with this talk around tax changes. Right, I'm going to stop sharing my screen for a second because I need to go find something on my other screen. Again, as you know, the people who watch these videos, there are no edits on here. Let's share the screen again. Just to clarify as well, I think in the top left-hand corner, this says copy of July market update. It is 100% the August market update. The data is correct. What was I going to share? Okay, right, my bad. Year to date. So I'm just going to run through some year to date stats as well. I haven't got it on the update. I'm just going to read it off my other screen. So year to date, in terms of properties for sale, so that's from the start of January to the end of August, they're up almost 8%. And then stock levels are up 23.5% on the 6 year average. New listings are up 3.7% year on year, and on the 6 year average, up 11%. Sales agreed are up 6% year on year and 4.8% on the 6 year average. So more stock, more listings, more sales, all positive. And then in terms of asking prices and pounds per square foot, they're all up across the board. So new listing asking price up 0.3%, year to date, 1.1% on sale agreed. And then new listing pounds per square foot up 3.5% and sale agreed pounds per square foot up 1.5%. So modest house price growth and modest improvement in activity levels is what we're seeing there. And then price changes, withdrawals, fall throughs, relisted. So price changes are up 15% year to date, and 40.5% on the 6 year average. Withdrawn numbers are steady year to date, so 0.3%, and they're up 13% on the 6 year average. Fall throughs up 10.3%. On year, and then 8.7% on the 6 year average. And then relisted are up 3.8% year on year, and then 4.2% on the 6 year average. So what is that telling us? That is telling us that things are pretty steady actually, and very stable, which is not to be sniffed at considering everything we've got going on. So year to date, in a good place. In terms of transaction numbers, you've got 20EA and Zoop reporting that we're going to see 1.15 million transactions, roughly speaking, which is about 5% up on your 1.1 million of 2024, which is good news. Remember, the long-term average over the last 50 years, roughly, is about 1.25. So we're not far off a normal market. Just need to remember that. Right. August. So again, left to right. So August 24, average asking price was 399 and a half. In July, it was 419. And then in August, it was 399 and a half. So whilst it has been a dip from July, that's seasonal, pretty normal. New listing average asking price is steady year on year. Pounds per square foot is significantly up at 394 rather than 358. So it appears it's the same sort of property prices coming to market, but from a pounds per square foot perspective, sellers are asking more money, which is interesting considering the increased stock levels, mortgage repayments, and house price to earning ratio, percentage of take home pay going on mortgage. It's interesting that sellers are asking that, which is why we're still seeing a lot of price changes and property taking longer to sell. Sales agreed average asking price. So again, steady year on year, and then month for month it's come down slightly. Again, a seasonal thing. And then sales agreed average pounds per square foot up from 335 to 349 and steady month for month. So again, it shows that whilst there is house price growth from a pounds per square foot basis, it is quite limited, and that again is because of the increased stock levels, more competition for sellers, more choice for buyers, and then whilst interest rates have come down and affordability has improved, it's still not what it was a few years ago. There's some really interesting data that's come out on remortgages. I'm not going to share that on this recording, but if anyone wants that information, DM me and I can send it over. Right, mortgage approvals for house purchases. So I've got the exact data on my other screen. So here we go. Right, so mortgage approvals for house purchases continue to edge higher in July. So this is July's the latest data. Approvals were up 1.9% on the month and 0.6% on the 12-month average. So again, modest growth there. And this was the strongest month in mortgage approval activity since February. Obviously, remember March, April, May would have been a little bit lower due to the stamp duty deadline and buyers sitting on hands going, well, what's going to happen to the market after stamp duty deadline? Pretty much it had a hangover like any stamp duty deadline has done in the past decade, and then things seem to have returned to normal. On an annual basis, approvals were up 5.5% on July 24, now 1.6% above the July 10-year average, which we see there. And that was the best July for mortgage approvals since 2021. So some positive news there. Again, mortgage approvals are moving in the right direction. Right, we have then got transaction numbers. So property transactions in July were up 2.2% month on month, and that was the third month in a row they've grown. Again, they dipped in April following the stamp duty deadline, gone up in May, gone up in June, gone up in July, which is good. That's like I said, after the slowdown in April. On an annual basis, transactions were 4.3% higher than July, and they're 3.8% above the 10-year July average. So positive sign that confidence is in the market and it is returning. However, the financial year, so this looks at April to July, 25 to 26, they're 7.6% lower than the same period last year and 10% below the 10-year average. So they are improving slowly but surely. But like I said earlier, in terms of predicted transaction levels of 1.15 million, the norm is 1.25. So we're slightly lower than a normal market, but we seem to be heading in a direction as long as the government and tax changes don't put a dampener to that. But we've certainly ridden a lot of storms over the last 15 or so years. So that is the transaction numbers. I've run through that. Inflation. So inflation is at 3.8%. That is the highest it's been since January 24 when it was 4%. But we must not forget that it reached 11.05% in October 22. So whilst we're not at the government target of 2%, we're doing a lot better than we were. But again, I think I said earlier, when you look at wage growth and you look at inflation, that is why interest rates are not going to be dropping significantly anytime soon. It has gone up though a couple of months in a row, whilst remaining steady in April and May. So yeah, something to monitor there, which obviously the Bank of England are doing when it comes to interest rates. Right, last, the major house price index updates. I think the only one missing from this is home.co.uk. They take a summer break, I believe, June, July, August. So there hasn't been one since May. So just across this, you'll see at the bottom the reasons why these prices will vary. But the average price on the house price index this month is just over 305,000. So monthly dip of 0.03% on average, so not really much, and still annual growth of 1.27%. So as I've kind of already alluded to, we're in a good market. Things are steadily moving along. And I've said this a lot of times, but I am looking to move. I'm doing a typical seller where everything gets in the way. But I'm looking to try and put my house on the market this year, move hopefully in next several months. I quite like moving in this market. I'd much prefer to move in this market than 2021, first half of 22. And I definitely wouldn't want to be moving in the 22, 23 market with what happened to interest rates. So I'd say in the last 5 years, this is from a kind of stability point of view, this is a nice time to be moving, and I hope I don't jinx it with that. So that is where the market is at. I'm now going to run through all those different house price indexes and a couple of other bits. So just quickly whiz through these. So the Rightmove house price index. So interestingly, they say savvy summer sellers drive best July for sales agreed since 2020. So realistic pricing over the summer months has meant sales have been agreed, which is great. Rightmove then go on to say that number of sales agreed is 8% up on this time last year. And number of homes for sale is 10% up on last year, which is why we've had a muting in the annual house price growth because of the supply and demand balance. Love this language from them here. So if I said about price reductions. They say it's a two-speed market. This is so true, so obvious, so simple. Many sellers are pricing competitively. They're agreeing sales. Price right, market right. There are buyers out there, but pricing too high is still an issue in the market. So just over a third of all properties have reduced their price, and since 2012, it's only been higher at this time of year in 2023. So really, really important when you're speaking to sellers, show them the comps, show them the market, really explain in detail what they need to do to get sold for the right price, and show them what overpricing can do to the overall result and outcome that they want. So overall average time to find a buyer is now 62 days. However, that drops by a month to 32 days if you just price correctly from the outset and don't need a price reduction, versus 99 days, so almost 100 days if you need to price reduce. There's loads of data I've got and case studies, examples, training I've done on price changes. So if anyone wants that, please do reach out to me. So third monthly price fall in a row, but it was in line with the usual August drop. I think July was significantly higher than normal. Average asking prices are now just 0.3% higher than this time last year. Busiest July for sales agreed since 2020. So great news that there's definitely demand in the market. You can see how steady things have been here as well across the board. And I won't run through all of those bits. You've got the actual house price index here. They go on to talk about how interest rates, whilst they're down on last year, they have kind of leveled out if you look at where swap rates are. So whilst the Bank of England base rate went down in August from 4.25% to 4, swap rates actually did go up a little bit. And that's obviously determining the fixed rates and the money that lenders are going to give to you to borrow. So yeah, interest rates haven't really moved too much, but they are better than they were a year ago. There's the rest of the overview. As I sort of already highlighted, the summer has seen average asking prices drop down, perfectly normal. You'll probably see a bit of growth in autumn. Then as we move into winter, they'll drop down. And then as the spring market returns in early 26, they'll go back up again. History just keeps repeating itself with that. Average stock has remained pretty consistent. And as you can see, the time to find a buyer is pretty in line with last year, slightly higher as well. Right, onto the Zoopla House Price Index. Let me just scroll up. Um, so let's go to this bit first, actually. Let's do that. So Zoopla reporting house price inflation of 1.3%. They have found that buyer demand, let's zoom in on this. Buyer demand is up 4% year on year. Flow of new supply 0.4%. So again, buyer demand better than new supply. Sales agreed at 5%, which is better than new supply, which is why we're still seeing some good returns on sales figures and why house price growth, whilst stunted by interest rates, inflation, wage growth, etc., etc., it's still moving in the right direction. And just remember a little bit of house price growth in the market, whilst a lot of people say, oh, people can't get on a ladder. It is good news for the market having a little bit of house price growth because it means people have increased equity. They're more likely to sell and move up the ladder. Stock at home for sale, as Rightmove reported, Zoop have as well, 10% up year on year. So there is increased stock level. Now, make sure that you're selling the stock you've got, but this is also a great opportunity to target the properties not selling with other agents. Remember, the longer a property is on the market, the more likely it is to change estate agents. That's obvious. Price reduced properties are more likely to change estate agents, and the properties that have fallen through are going to be more likely to change estate agents. So make sure you're targeting those properties. Right, let's scroll down here. So as Rightmove reported, Zoopla have as well. So it takes almost 2.5 times longer to sell a property if you need to cut the asking price. So great little sort of graph chart, I don't know what to call it, that highlights that. And then if we just run through this, homes with wrong asking price take twice as long to sell. So time on market measure tells us about the time it takes from a home being first listed to going sale agreed. Homes that are well priced are attracting bids and selling in a timely manner, albeit with some regional variation. So 2 in 5 homes for sale in the first half of 2025 went on to sell. 3/4 of those did not require any price reduction to attract buyer interest. It goes to show price correctly, people buy your property. When they see a price change, they think what's wrong with it. Again, you are going to have to do price changes. It's just part and parcel of the market. If you want better understanding of the do's, the don'ts, how to and when to do the price change, hit me up and I will share some data on that. So, like final paragraph there, setting the wrong price can mean it will take more than twice as long to find a buyer and sell the home. Homes that need a price reduction take 2.5 times longer to find a buyer versus homes that are correctly priced. So it's an important consideration that agents need to be letting sellers know about. So already touched on this, but 10% have had an asking price cut in July. So in July, 10% have had a price change well above the 6% average over the last 5 years. So again, whilst I said it had slowed down in August compared to July, we are still seeing a lot of price changes compared to the 6-year average. Really good chart to show that again when you're speaking to sellers about the importance of pricing correctly. It goes into some regional stuff. I'm not going to touch on that. The tax relief, again, won't go into this too much because it's all just predictions at the moment. But yeah, national insurance on rental income, change in stamp duty, change in council tax, capital gains. The government are talking of all different things. Interesting to see how that plays out across late October, early November with the budget. Who knows what will happen? But again, as I said earlier, Zoopla are reporting that they believe there'll be 1.15 million transactions in 2025, which is a good market. Again, remember, find the buyers and sellers who perhaps are going to speed up their decision making because of the potential tax changes. Deal with them, get them through. Don't just let people sit there and go, well, let's just wait and see what happens in November. If you look at all the different historical things from elections, stamp duty deadlines, Brexit, there seems to be a sit on hands approach for the months leading up to something, a hangover afterwards to go, is there going to be any impact? And then things return to normal. Look at long-term house price trends when you're speaking to these buyers and sellers and show them that typically property only goes one way. In my LinkedIn newsletter, if you want to refer to that, the government are not hitting targets when it comes to level of houses they need to be building. And when you look at the number of first-time buyers in the market, when you look at how long people are living for, net migration, when you look at some nationwide data that I'm going to share in a second, we've got an increase of demand that is exceeding supply. So even though there are the tax changes that might come in, people still need somewhere to live. And even if you look at the interest rate changes we had in late 22 through 23, yes, there was a reduction in activity, but people still moved. And even in the worst climate, when I first came into a state agency in like 2008, I think you still had the best part of a three-quarters of a million people roughly move home. So even when the world went to shit, excuse my French, you still had three-quarters of a million people move home. That would be my litmus test if I was to be an agent today. Right, based on X, 750,000 transactions of a however many properties there are, probably reduced from social housing, you're probably talking about 22, 23 million off the top of my head, maybe a bit higher. Okay, what percentage does that entail? So actually, I'm just going to work that out. And these are just rough numbers off the top of my head to do. Excuse me if they are wrong. That's about 3%, which sounds about normal. So about 3% of the property market turns over each year. So if there's 10,000 properties in your chimney pot, um, think of a 3% turnover as like the minimum. Um, 5% is great. So if we say 1.150, work the calculator. I'm really going off on a mad one here, so I apologize everyone watching. That's yeah, 5%. So really terrible market 3%, normal market 4-5%, great market 6%. So put yourself in the middle, maybe a 4.5% turnover. So if there's a 10,000 chimney pot in terms of owner occupied or rented properties you can actually sell, 10,000 chimney pots, you're talking about, if my maths is right, that's about 450 transactions a year. So if you wanted to take 10% of the market, that would be 45 transactions. Just try and work it out like that. If anyone wants to go into more detail about that in terms of business planning, for your estate agency, so size of market, what you need to take to earn the income you want, again, feel free to get in contact with me. Uh, Let me just run back through the other page of the Zoopla House Price Index. I think we have covered the bits I wanted to. We have indeed. Right, Halifax House Price Index, which I have no idea why I've just decided to delete that. Let's open it up. Right, Halifax House Price Index. So they've got the average UK house price at just over 298, monthly growth of just under 0.5%, quarterly down 0.1%, unsurprising in the summer months, and up 2.5% annually. Amanda Bryden at Halifax says that growth is the biggest monthly increase since the start of the year. Interesting. While the national average remains close to a record high, it's worth remembering that prices vary widely across the country depending on number of factors, not least location and property type. So again, there are markets within markets, markets within markets, markets within markets. Look at the micro markets. You've got local authority, you've got county, you've got town, you've got village, you've got postcode district, postcode sector. If you want to understand that better, uh, drop me a line. Scroll down. Challenges remain for those looking to move up or onto the ladder. Mortgage rates are continuing to ease. Wages are still rising. The picture on affordability is gradually improving, but it's certainly not where it was a few years ago. Combined with more flexibility on the affordability assessments from lenders, the result is a housing market that continues to show resilience. I've said about stability. That has meant activity levels are holding up well. They expect house prices to follow a steady path with modest gains throughout the year. Again, I've already touched on that. She goes on to say about the end of fixed rate mortgage deals. So, second half this year is going to see a notable rise in homeowners who are coming to the end of their fixed rate deals. They took out during the pandemic where they were at record low interest rates. So, that means that those mortgage holders are going to be coming off of, I don't know, a 5 year fixed rate, let's say, if it was below 2% and now looking at 5%. Imagine adding another 100, 200 grand onto that mortgage if you want to upsize. That's a chunky increase on that. And again, if you want to understand some more data on the remortgage market, do give me a shout. So whilst most borrowers are coming off the end of 5 year rates, they will see their monthly repayments rise. The extent of that will vary. Again, reach out to me. There are some coming off 2 year fixed rates. That is me. I wish I got a 5 year fixed rate in 21 when I remortgaged, but there we go. So people like me, we're going to likely see our monthly payments come down a little bit. which is great. We're unlikely to see a significant impact on house prices, as she's already touched on, but it may influence market dynamics if prospective home movers choose to delay plans as a result of tighter budgets. So some might delay plans. Again, there's data out there, which I think I've reported on my LinkedIn newsletters before. The remortgage data shows it as well. A lot more people are staying where they are, converting their loft, converting their garage, doing extensions, rather than putting money into an estate agent's pocket or the taxman's pocket, removal, conveyancing. They're like, rather than doing that, I'm just going to invest money into a property where I am. So something to consider as well. So on that point, I just did a training session this morning. If you are not using some form of prop tech out there, you don't necessarily need to. I'm just going to say a very straightforward, free way to do this. Save, bookmark, favorite your planning portal. Probably set something up with AI as well, but uh, save, bookmark, favorite the local planning portal. And at the start of each week or the start of each month, look at the planning applications that go in. There will be opportunities there. You could write to people who are maybe looking at converting and say, hey, would you like me to come out and give you advice on how to do the right thing, the do's, the don'ts, on how to increase value saleability? And there might be people on there who've put in for planning who actually exist in your CRM. Ring them up. Hey, John, you bought for us a few years ago. Couldn't help but notice in doing some research for something else, you put in for planning to a single store extension. Would you like me to come out and give you some advice on it? Great way to stay in contact with these people. If the planning doesn't work out, maybe they'll look to move, get the sale, or they might really appreciate all the advice. You might want to do a before and after photo shoot for them. They're going to then tell all their neighbors, friends, family, work colleagues how amazing you are. You're going to get referrals and recommendations from them. So just something to consider there. The other thing we noticed when I did the training session this morning as well is that there was a bungalow that had been bought by a developer. They had put in for planning to knock it down and put two properties on that site. I'd immediately be going onto that developer's website, sending an email, connecting with them on socials, and seeing if I can do anything to try and get that as a sale. But again, the line would be if you want any advice on the do's and don'ts right now, exactly what buyers are looking for, so you can get as much value out of the development as possible. Here's my details. So definitely look at that. Right. Nationwide. So before I get onto Nationwide House Price Index, there's a really good release they did, which was lock, stock, and new solar panels. If you've not watched Lock, Stock, and Two Smoking Barrels, I strongly recommend you watch that film. It's brilliant. Reminds me of my childhood and watching it with my dad, although he probably shouldn't have let me watch it as a kid. I'm pretty sure it was like a 15 or 18. I remember watching that on a video as well, randomly. Tell me you're a 90s kid without telling me you're a 90s kid. So there's lots of interesting data on here. I'm not going to go through too much of it. But the thing that I did want to touch on is uh, this bit here, the bedrooms. So um, I've clicked on the Scottish one. I wondered why that was different. Right, again, you can see no editing done here. There we go. Right. Sorry to anyone in Scotland who is offended of that. So bedrooms, there we go. Right. 87% of owner-occupied properties in England have at least one spare bedroom. Now, remarkably, 53% are classified as being under-occupied. That is to say they have two or more spare bedrooms. The proportion of under-occupied properties has been trending up over time. So try and target that downsizing market. Explain to them why now is a good time to make a move. They can reduce their bills, take that equity, invest elsewhere, buy a holiday home abroad, buy a holiday home, I don't know, in Cornwall, Devon, Norfolk, wherever, reinvest, give money to children because they're first time buyers. I think the under-occupied market is underutilized as a resource for estate agents to prospect. I'm going to use my grandmother as an example. So she was in a three-bed house. She lived in one bedroom, so she had two spare bedrooms. She eventually did downsize and has moved in with my mum and dad in their annex, and they care for her. So do target those properties. Now, I don't want to go off on a tangent and be all political here, but just been talking about tax reform that the think tanks have kind of leaked that the government might be considering in the upcoming budget. I probably have said this before. There's been, let's say, penalisation of landlords or penalising people with extra stamp duty, etc., or there's been incentivizing first-time buyers. We need to incentivize the under occupied properties to move home because that's causing constipation to the rest of the market. It's all well and good having incentives for first time buyers, but if those people are looking to sell to a first time buyer have nowhere to go because the people above them have nowhere to go, and then the people at the top, there's no benefit of them downsizing. We've just got this stalemate. So it sounds mad, and a lot of people wouldn't like it, but we do need to incentivize the people at the top of the chain to move home, and that would free up the market more. What exactly that looks like, who knows? But it is clear by these figures it is an issue, and it's a growing issue as well. So if you look at the underoccupied, it's just steadily gone up over time. And as the population continues to get older and older and older, as we live for longer, this is not going to slow down. It's going to keep creeping up as it has done. So just thought I would share that there. Onto the actual nationwide house price index. So go on to touch on about a little bit of what I've said. But they've got annual house price growth at 2.1%, slight drop of 0.1% month on month. Some really good commentary from Robert Gardner. So he said August saw a slight softening in house price growth, perfectly normal. The subdued pace of house growth is understandable given the affordability remains stretched. I've already touched on that. Whilst affordability is better than what it has been from a long-term perspective, it is still stretched. House prices still compared to household incomes. Again, I've already touched on that. And raising a deposit is challenging for prospective buyers, especially given the time we live in with cost of living pressures. That's where the bank of mum and dad and grandparents and family members come in. Again, if you check out my LinkedIn newsletter, there was some data and research in there that I talk about on first time buyers, which is some really, really good information. Again, you've probably got loads of tenants in your database if you do lettings who are looking to become first time buyers. Maybe you've got those people who are living in under occupied homes that could sell up or gift money to children who are renting, who could be first time buyers. I'd recommend doing some form of first time buyer seminar or webinar. That would definitely help. I spoke at a wealth management event for St James's Place, I think after the last year's autumn budget, or was it a spring budget? Might have been spring budget. Can't remember exactly. Three people came up to me afterwards asking for advice. One was a first time buyer, one was looking to buy their first buy to let, and another was saying, what do we do? We're under occupied in our house. What do we do with our finances? So there's definitely opportunities out there. Go and talk about a property market in your local market, in print marketing, get emails out, PR in your local newspapers, social media, video content. There's loads you can be talking about. Anyway, I've rambled on there. So third paragraph down, combined with the fact that mortgage costs are more than 3 times what they were during the pandemic, that cost of servicing a mortgage is also a barrier for many. So again, you've got to remind sellers who are hitting the market now, if they bought in that COVID time, show them how much it costs to service a loan and buy that property now, and it will make them go, aha, right, that's why I need to price aggressively. On that. You haven't got a stamp duty holiday helping, you haven't got record low interest rates, you haven't got reduced stock levels. You can still get a good price. Record house prices showing that. You just got to price and market reasonably to achieve that. So average earning buyer, the typical first time buyer property with a 20% deposit faces monthly mortgage repayment equivalent to 35% of their take home pay, slightly above the long term average of 30%. So affordability is continuing to improve gradually. So if income growth, so wages do continue to outpace house price, which they're doing and is expected across the board. Borrowing costs are likely to moderate. Again, I've already said this, base rate will come down a little bit. Interest rates will come down a little bit is what we're seeing. That should support the buyer demand. And actually, especially since the household balance sheets, haven't touched on that at all, are strong and labour market conditions are expected to remain solid. So again, unemployment is pretty steady across the board as well. I've already touched on the housing stock, so I won't go onto that. And you can see here from the house price earning ratio, again, improved significantly from a couple of years ago, but still ahead of the long-term average. Halifax house price index, which I've already spoken about, so we'll get rid of that. eServe house price index, so 0.6% down in a month, 2.2% down in a year. I always find their updates are really negative. I've probably said this before, but I think that just sums up surveyors. Sorry to any surveyors who are watching this. So affordability pressures in the southeast and across southern England have held the market back. In a higher interest rate environment, you usually find that London and the south do struggle more than Wales, Northern Ireland, Scotland, and the north of the country. Higher stock of properties for sale, we've already touched on, has meant that house price growth has been limited and there has been more price reductions as sellers try to compete. Lower interest rates through the second half of the year have aided prospective buyers and strengthened market fundamentals. A lot of big words there. A bit of this is outdated, but I'll run through it anyway. A market still adjusting to earlier stamp duty changes and more sellers listing. Activity remains subdued. HMRC data for June shows signs of recovery in transaction volumes. As you would have found from my earlier thing, that has continued in July. The base rate, so this week's base rate, you can see that it came out in early August, went down to 4%, offering some relief to borrowers, first-time buyers. Uh, they don't expect much of a significant change in mortgage rates and short term. I've already touched on that. And then there's lender caution as well. And then you've got the way on affordability, especially in higher price regions like London and South, I've already touched on. Nonetheless, rising real income, so wage growth and improving sentiment. We've definitely had an improving sentiment. If you look at I think it's a Lloyd's Business Barometer that I report in my LinkedIn newsletter, highlights that as well. We are entering gentle recovery, so we're not setting the world alight. Again, stable, steady growth is what we're seeing. Further rate cuts are to be expected. Like I said, I reckon we'll have one more this year to 3.75, and then we'll probably have every other meeting next year will drop as well, according to like OBR forecasts. Um, no major policy inventions on the horizon, interventions. Well, this was before the leaks on tax reform came out. The second half of the year could offer a more stable footing, perhaps a little less stable because of the news we had towards the end of August. Um, I've already touched on this, I think, but distortions to the usual monthly pattern of property transactions caused by the change in stamp duty across England continue to unwind. HMRC figures uh, show a further pickup in activity. Again, as I said earlier, July it improved again. Underlying sales activity is improving, although a large number of sellers entering the market has led to prices softening. So again, a lot of seller activity, more competition, buyers have more choice, so that's going to limit the house price growth. And then I'm not going to run through all of this because there's a bit more kind of meat on the bone there, but I don't think really adds any value. So what I'll do is I'll go on to the last bit. So UK house price index that I'm going to end with. So this is based on the latest completed data in June. So the average UK house price is 269,000. That's up 3.7% annually and 1.4% month on month. So for clarity on that, that's completions in June. If it's taking a few months for a sale to go through, they probably got agreed at the start of the year. So it's going to be lagged. But when you look at the up-to-date data that I've already shared earlier, things are pretty stable. So that is the August 2025 market update. Thank you very much for joining me. If you have enjoyed the content, please do give this a like. Please do leave me a review on Google. Please do share it with industry colleagues that you think could benefit from this. If you've got any questions, give me a shout. And then last but not least, make sure you hit the subscribe button. I think I've got 120 subscribers. I would love to get that figure up. And I am going to be doing more content in YouTube, on YouTube in the future around lead generation hacks and how to use property data to be a high performing estate agent. So stay tuned for that in the future. But once again, thank you for listening and watching and tuning in. Early October, where are we now? Early October, I will be doing a Q3 market update and year to date. So stay tuned to that. It'll be interesting to see how September fares, considering the leak on tax reform towards the end of August. And yeah, again, thank you very much for watching. Thanks for all your support. Give me a shout if you've got any questions, and I will see you in a month's time for the Q3 update.